Greetings, everybody. It's Jeff Scott. Welcome to this week's top-down review. Not sure how long this one's going to go. I titled today Selling in May because that's what it feels like we're doing. Although, based upon how news flows of late, things have a tendency of changing very quickly. Disclaimer, this is for education purposes only. I'm a doctor, not a broker. I'm not licensed to tell you what to do. I have no Series 7s, etc. I'm independent. I pay for my tools. I've done these webinars for years. I did them to start as providing free customer support to users of HGSI because I learn more by talking and it makes me a better trader. And I've always been supportive of that program. I think it's a great program, and teaching people how to use the program better means they're going to stay with it longer. And trading involves you and you alone. It involves risk. It's based upon your own decisions. I'm not responsible for any decisions you make. And even if I recommend or say I'm buying something, this is a webinar. It's Sunday. I can't tell you what I'm going to be doing this week on Tuesday morning. I can just tell you that I'll have a watch list of stocks that we mentioned tonight. I'm not going to spend much time here, but I like to call out those folks who I've learned from. And I call my education when I do my live sessions a be your own guru. And what I mean by that is you need to read, you need to study, you need to get educated, and then you put together what works for you. And that's what I've done, and this is what works for me. I have a lot of technology. If I was on a desert isle with internet access, which is sort of sounds silly, I'd like TradeStation, Thinkorswim, and HGSI. Anything else I can do without. But other things like EdgeRater, the Q tools, some of the seasonality tools help to fine-tune me and make me a better trader. Aside, my dog is crying in the background. I apologize for that, but he has had too many treats already today. The website for HGSI is highgrowthstock.com, and I pointed out, not because I get anything if you order from them, but there is a free 30-day trial. They don't require a credit card. And then if you were to take the trial, please spend some time on the movies under investing strategies, because you'll find that there's a lot of people, myself included, that put videos on how to use HGSI. It's a very, very powerful tool. It's just sometimes not the most intuitive tool. Stock patterns are cyclical. If you had to ask me where we are, we're probably just coming over this uncertainty and starting down in stage 4 fear. I will also tell you that over the last several years, our trends have lasted to the downside days, and before I could even reposition my portfolio, we start to move back up. One time I'm going to say it's different this time. I'm not sure that this time is it. I can tell you that for me, there's still uncertainty, and that's impacting on how I'm trading. I have raised cash and have smaller positions. I've sold premium for out of the money calls on or not that far out of the money calls. Most of my longs, I've got some spider puts, I've got some TQQ puts, and I'll be very quick to adjust my positions first thing Tuesday morning based upon the news over the weekend. I took on a little bit more hedging to the downside this weekend, protection, just because with 3 days, there's plenty of time for some retaliation by the Chinese. If I look at the sectors, and I didn't let this totally populate, on Friday, you can see that there's a lot of green. Financials, I hate when I do that, were extremely strong. And financials are not just banks, but they could be REITs. They could be, although real estate has their own sector now, but some of the financial servicing and mortgage companies might be under there. Banks, large and small, insurers have been very strong. While energy, XLE, has started to weaken some, you can see a little bit more red there. And utilities up where my arrowhead is, and rolling over from this side, is also a defensive play and might have been weaker on Friday. Where I'm seeing a lot of strength has been healthcare, especially things like biotech, which we'll talk about. Let's look at the major markets to get a sense of what's going on in this market. And for that, I'm going to go into Thinkorswim. I'm going to maximize my sell, and I think I can get more out of it by doing that. See how long it's going to take for me to get that to happen. Come on. There we go. So bottom in December, clearly a big move up from 23.16 to 29.61, so 648 point move. That's a pretty significant move. We have sold off since then. We'll get percentages perhaps later. As I look at this, we're sort of, in a, Dan Fitzpatrick, who I like to listen to sometimes, he likes to talk about this being a box. And perhaps you could write the box wherever you want, but I might put a box. I don't want to do that. That may not be what I want. I'll show you at HGSI where I'm much better at writing. But the bottom line is we're going sideways here between the 50 and the 200 on all my charts. The green is a 17-day simple. The yellow or blue on a white chart is a 50-day. And the red is a 200-day. And these are all simple moving averages. Hold on one sec. Let me turn this off. Get rid of that. So we're going sideways here. A break below that line, which is at 27.98. So the 2800, a lot of people have said is a magic line. I think I would agree with that, especially when you look to the left and you see how this area has been support in the past and resistance in the past. This is a pretty important zone right here. And a break below that, then the 200-day moving average becomes in question. Right now, it's sideways, but it's sideways in a longer time frame, lower lows, although this low here is actually a little higher, so it'll be interesting to see. Right now, sideways, way off, not way, but 3 to 4% off their highs. If I look at the NASDAQ, that was the E-mini futures. I look at the NASDAQ futures, I could see the exact same story. The Dow futures, let me give it a little bit more stuff. Same thing, off their highs. Now the Dow futures actually broke down below the 200-day moving average and held. So that's kind of interesting as well. So, but a little weaker, the Dow. And then the weakest has been the Russell, which is, as you can see here, considerably below its 200-day moving average. Make that similar to the others. Okay, so it's broken down. If the E-minis and the NASDAQ follow this, that's not going to be good for this market. The VIX kind of going sideways here. Had a quick bump and came back down. It's got a person buy signal. A strong VIX is obviously not good for the market, and this is a sideways VIX, but sideways above where it had been falling in, months ago. It was coming down to levels that were significantly lower. And then the dollar, which had been running up, and let's put the dollar to a little longer period of time frame. On a weekly, you can see the dollar bottomed here in 2017, has been on a big move up, but it's still way below its highs of back in 2015. And if I now go back to daily on the dollar, steady uptrend, although we've had a short-term pullback here. And you know what a strong dollar means if you've been bullish on metals. Let's go back to my PowerPoint. Note, my PowerPoint is only to save me time. There's slides that represent what I would show you in the programs, especially here. Rates, if you look down here in white on both the 10-year and the 30-year came down. Again, falling rates. You can see who they're good for. Typically, they're not good for financials. They're good for things that pay dividends like REITs, MLPs, utilities, and home builders. Hard to see, but the spread between the 2 and 10 years actually went up a little bit this week as the interest rates continue to fall. Perhaps this is related to the trade war, tariffs, and concern about economy and leading to a recession. AD lines are in white, the markets are in yellow. The AD lines actually turned down on the small stocks, didn't turn down much on the big stocks. AD lines are still at all-time highs. They've come off a little bit. You can see it better here on the NYSE. It's come off a bit. And at the same time, all my bullish ETFs, which are things like diamonds, spiders, Qs, Russell Future, IWM rather, transports, have all dropped. And with declining rates, no surprise, bonds are higher. Breadth retreats on both stocks above the 200-day here, stocks above the 40-day. their 40-day moving average here. These are the percentage of stocks above their 240-day. They have dropped. So breadth is retreating, but not at oversold levels yet. And you can see we actually bounced here a little bit, the number of stocks at 3-month new high, new lows. The daily McClellan, I don't see a signal here. There's no divergences. There were divergences for a long time, and the market rolled over. And here's the weekly. I guess one thing you could look at is, when we get down to the minus 4,000 area, the market's reversed, and we've just started coming down on the summation index. The buckets, I think, tell an interesting story. So for those who haven't been here, imagine you take the S&P 1500. You put each stock in their Bollinger Bands. We set 0 as the bottom band, 10 as the top band, and you can get 10 deciles, 0 to 1, 1 to 2, 2 to 3. And if I told you that somebody had a percent B of 30, you would know they're in that third decile. Turns out there's 12 deciles because there's one below, so we call that less than 0, a stock below the lower Bollinger Band, and one that's greater than 1, which would be above the Bollinger Band. Then we can map out where the stocks are. This is important because in a market that is very exuberant, we start to get a lot of stocks trading above their upper band of the Bollinger Band. That should mean that we're at a high risk of a reversal to the downside. In a weak market, we start to populate stocks trading below the Bollinger Band, and a mean reversion to the mean would mean the market should probably correct to the upside. What we see today on Friday's data, using my SP 1500 that I put together on April 1st, so it's fairly current, 3/4 of the stocks in the S&P 1500 were below the midline of their Bollinger Bands, but you could see very few stocks are below bands. Now, interestingly, the number of stocks below the Bollinger Bands was over twice as many, almost 3 times as many on Thursday. So the market was starting to get oversold, and then Friday's recovery rally made us less so. We'll see if we go back to visit oversold values this coming week. The other thing that's been somewhat controversial are the Hindenburg-Omen signals. Now, for somebody who has never heard me speak or heard Ian speak and are unfamiliar with the Hindenburg-Omen, this is a collection of signals: new highs less than twice the new lows, McClellan oscillator less than 0, a rising moving average. Now, I thought it was weekly on the NYSE, and then the number of new highs and new lows greater than 2.2%. And what it signifies to me is that period of time the markets run up, the pros are saying it's getting too high, I want out, and the amateurs, the individual investors perhaps, are buying the stock at the highs from the pros, and it's certainly in the past has often predated a correction. Now, Hindenburg omens are pretty promiscuous. You see them often, but only about 1 out of 4 of them actually are associated with a significant pullback. When you see multiple Hindi omens, then you should really pay attention. Now, if you notice down here on the NYSE, I'm seeing a lot of Hindi signals. Now, there's been controversy because you're not going to see them in HGSI. They use a different calculation for the moving average. I'm using the underscore index. I try the S&P, the spider, and I get the same result. I can tell you I went to stockcharts.com, used them as an independent source. They have 5 things they look for, and 4 of the 5 are positive, but the 5th is not, which is the moving average. So I don't have good conviction that these Hindis are real, but it does cause me to stiffen my back and be aware that this market could be subject to a pullback, which you knew already. Bears are clearly on the march, and if you look at the bandwidth here times percent B, the Woody indicator, yellows and reds, there's no green, so it's a mixed market, but it's certainly to the bearish side. And if you look at sectors in the same level, you've got some green here. I think that's 1, 2, 3, 4, which is utilities. And I would have expected real estate to be green as well, which it's not yet. But you've got a lot of red, and clearly you're getting defensive on the sector side. I like to look at Q-Edge for sectors and industry groups in addition to HGSI. And if you see my computers today during the day, this is on because I'm getting real-time updates without having to run an update on HGSI. It's a wonderful program, QEdge. It hasn't replaced HGSI for me because QEdge is a spreadsheet macro program. It needs Thomson Reuters data to update, so you'd have to have a real-time subscription to do what I said I do. And so for HGSI, for $600, it does more than this does at 75 or $50 a month, plus having to subscribe to Thomson Reuters. However, if you have Thomson Reuters, I highly recommend it. What did it tell me? When I looked at end of day Friday, if I look at the last 10 days in maroon or brown, the only markets that have been up over the last 10 days were utilities. And that's no shocker. Obviously, the markets are in correction mode. And then if we look at one day after what was supposed to be a strong day, I would say it was a really anemic bounce considering the prior couple of days. And you could see in magenta the strength. Discretionary had some strength, financials and healthcare, information technology materials, and real estate. And the big loser over the last 10 days, down almost 9% here, is energy. So I ran the sectors at the end of the market in the weekend, and what did I see? And I did a pace of 2 days. So I looked at not just which was the best, but that showed me where was there a lot of acceleration coming into. And I saw at the top information technology and healthcare. Financials was also strong, but it was a lot of its strength came in on Friday. And this is 2-day strength versus 1-day strength or 5-day strength. So I'm very interested in healthcare, especially knowing how it's been out of favor, and all of a sudden it's coming back with higher numbers. The darker the blue, the lighter the blue, and the higher the number, the more strength. So on Friday, financials, even consumer discretionary was doing well, but I'm liking healthcare right now. Now, all the fighting in Washington will start to kill the idea of drug pricing cuts, which is good for biotech, especially new biotechs and pharma. And it probably will start to squash some of the comments about Medicare for all, which is broad-based benefit, I would think, to payers and others. So I was interested in healthcare, so I used the check mark and I checked healthcare. And what it did is it dropped me down to the various industry groups. And the industry group that I was most interested in was biotech. Again, looking at the small numbers, and those that listened to last week's video know I talked about this weekend being the American Society of Clinical Oncology. And then I opened up the fundamentals on a lot of the stocks in biotech, and then I ranked them by valuation. And the stocks that are the blue and the higher numbers are undervalued, perhaps, and those that are magenta are overvalued. Since I'm looking for a bullish signal, I looked at what were the stocks that looked interesting. Now, I've been a big fan of AbbVie for some time, thinking that it's a biotech that pays a big pharma dividend. But what was really interesting is if you want to be long biotech, isn't it great to see Biogen, Gilead, Celgene, Amgen up near the top? So maybe there is something to be said that this is a good time to be buying biotech. Canaries in the coal mine have broken down. I'm probably going to drop this index. Pretty soon we'll be testing the December lows. Tesla is really not helping. This is the index of leaders from March 3rd. And interestingly, despite big market sell-offs, all we've got here is sell-off and we're in the bottom of the channel. So maybe we're getting close to a bounce or a breakdown. Know Your News and Earnings. I thought it was a medium news week. You've got sentiment, income, PMI, jobless claims on Thursday, GDP on Thursday, trade on Thursday. You got a little bit, but not a lot of Fed speak. Kind of a quiet post holiday week. And notice there's no news and no markets on Monday. Hip, hip, hooray. Earnings per share, there's still a lot. I thought that maybe it was not, I thought Dick's was out. I'd have to go look. But here's some of the earnings that are scheduled for this week. And as I put down here, it's a judgment call to hold stocks over earnings dates, and it's bad judgment to not know when your stock's earnings date is scheduled. So if you have one of these, it probably behooves you to know. So muted rally on Friday after multi-day sell-off and a widely down week. I think everything was down over 1%. Concerns about higher tariffs, widening trade war weigh on the market. Also weak time in the market seasonality. I mentioned the multi-HINDY. Signals were down less than 5%, so we only had a small correction. My expectations, I expect the weakness to continue. I've hedged my longs. That said, I'm also aware that all it will take to reverse the market will be a tweet that a trade deal is near. On the downside, a long weekend makes a perfect opportunity for the Chinese to announce some retaliation for our most recent acceleration of the tariffs. So let's go on to the charts. Let's just take a look at TradeStation and see if it works today. Looking at market force and divergence, and let's just look at the major market indices. They all were green because it was a positive day on Friday, but it was a lot more positive day early on. We'll start with the E-minis. Doing the same thing. For whatever reason, it doesn't always like to switch. Probably because I got too many things open. So the S&P, a sell signal came in on Thursday, a weekly sell. Monthly, it's still in a buy. Hard to say that we're in an uptrend on the short term, but certainly long term, there's a massive upturn. Our high jumps come down to 72%, and the weekly bongo has gone green. I look at this, and I think we go down. I think this market is in the midst of a pullback. Hopefully we don't get much more than 8% down. We shall see. The Dow futures, it looks like I got the, excuse me, let me get the Dow. That is strange. Let me go in here just to make sure I'm not on the wrong one. Yeah, I mean, had a big debate about TradeStation with John Person the other day, and he thinks that 9, and he's right, is still much more stable. Maybe I should go back to it. Some of the things I have probably won't work in 9. So let's just look at the Dow futures here. And we could see, like the E-minis, the Dow futures went into a sell signal on, do this better, on Thursday, and weekly sell signal, and monthly a buy. Again, long term we're up. We're certainly in a period of time that looks like we might be dropping further. You can see the weekly bongo's been red for a couple of weeks. If I look at the NASDAQ futures, again, downtrend, sell signal, long-term buy, new weekly bongo red. And if I look at the Russell futures, a little bit longer of a downtrend, and weekly red, and monthly showing some red here, which is kind of risky. Hard to get excited by those, thinking they're anything but bearish appearing. And if I go down and I look at the dollar, a new sell signal on Friday, so maybe we got a leg down on the dollar. These are some MACD concerns, divergence, although it's still a weekly sell and a monthly sell. And if the dollar starts to weaken here, then we may see some action on gold. So here's gold here. And you can see gold actually had a buy signal on Thursday come in. So these are markets that are not real healthy, in my opinion. Let's open up HGSI. Let's go into the major market indexes and repeat a little bit of that using HGSI. All right, so rank this by top-down view because that takes into account just price and volume, which is how I like to look at the indexes. Let's rank them by raw count, and we could see bonds, commodities, utilities are right up at the top, which can't be good for the bulls. And on the bottom are transport, semis, NASDAQ, so especially the NASDAQ. All right, let's look at the S&P 500. Now, I am using a different resolution today. I'm trying native resolution on the Surface Pro, which is 27 by 18. And that should make it easier to see if you have a 3K or 4K monitor. I hate doing these in full HD because I don't have a full HD monitor, which means I have to go and adjust all the sizes, everything. I'm trying to find out where the happy spot is, where I can avoid adjusting those things. So I'm just setting up so I can have two screens, or two charts, I should say. I already have two screens, but that doesn't help you during this. And I want to put a daily index view on the left, and then I want a very short, skinny, just to know what monthly is doing on the right. So I think it opened up over here. Let's see. It did. Perfect. Let's set this up. In my original on HGSI index, there is a weekly CRIS, which I like because I have found that I'll show you when it happens, but when the moving average compared to the spiders becomes positive to its moving average, I often get a reversal to the upside on the index or the stock. So here's the S&P 500. I did this last week. I started with a bigger box. It came down to the 200. I said it could go up, it could go down, or it's kind of likely where these little arrows are just to go sideways. I then put a smaller box and said that this box might be more important. And as you could see, support and resistance in the past. Well, we came down to that box on Thursday. We bounced. We had an inside day, kind of a spinning top day on Friday. So I see a market that's going sideways. A break below the little box and certainly below the big box is going to be very problematic. We also had a weekly bearish doji reversal. I would count the prior bar as the doji reversal. I wouldn't count, or low close doji, I wouldn't count Fridays because you already had one, the preceding bar. That one's still in effect. So the S&P is sideways in a box, as we saw in TradeStation. If I look at the Dow Jones Industrial, pretty much the same story, as it's hitting up against the 200-day moving average. Notice it's weaker than the blue being the S&P. The relative strength is weaker than the moving average, and this is compared to the spider. If I look at the NASDAQ, that was the Dow. The NASDAQ looks a lot like the S&P, trading within the box, and it just became weaker than the spider from a moving average perspective. And if I look at the Russell, this has been the weakest of the bunch. And you can see how the Russell has dropped well below its 200-day moving average. And we're not far from having another cross of the 50 below the 200 or going back down, which is not good for the bulls. Now, the dollar here, you can see the dollar ran up here and reversed on Friday. And this is a low close doji on the dollar compared to this bar here, which would suggest we're going lower. We had my indicator here, also shown here, showed a sell signal, and we had a kahuna to the downside. On the VIX, as I said, it's dropped down, but it's not nearly as low as it's been. So the VIX is still a little bit elevated, so perhaps more risk there than we think. Gold will go up as the risk goes up in the market. You can see it had a buy signal come in on Thursday, kahunas in a squeeze, but it's still no way not to say it's still not in a pretty significant downtrend. We'll have to see where it's going to go. If this doesn't break and hold above its blue 50-day moving average or take out the chandelier here, I'm not sure I'd be chasing gold, although gold will go up if the dollar drops or the market becomes more risky. So it is a risk off asset, and silver looks worse than gold, at least to the downside. I want to show you something that I added, which is the Innovator IBD FFTY fund. And this may replace my Canaries. And this is a IBD 50 that's reset weekly by Investors Business Daily of their IBD 50 stocks. And the message I have for you here is if the top stocks in the market, as chosen by William O'Neill and the rest of his team at IBD 50, can't move up, and in fact are in sell signals, how likely is it that your portfolio of growth factors, high growth stocks, are doing well? And I think we know the answers. I think it's a tough time to be buying growth stocks. It can change, but as of now, it's a tough time. Then I like to look at industry groups. I hit my warehouse view, and I'll sort these by 2-day up. And the first group that comes up is biotech. If we look at 2-day down, you'll see how strong Friday was, and you'll see very few stocks to the down. 5-day down, so stocks down over a longer period of time, you still got 65 to the downside. 5-day up, stocks in a longer uptrend, you have only 18. And 2-day up, which is what I'm concerned about here today, you have a nice list that just showed it was a decent day, not a great day on Friday. Biotech. There's some names here that I like that let's just take a look at. So Arrowhead broke out. Actually a beautiful story. I'm not long. I was watching it. I took some other things instead. Sideways move in a squeeze now since March. And what happened on this day here? My indicator fired. You had a kahuna. You had a mobile breakout from a squeeze and a Bible gap up. Very bullish signal, especially after a prolonged base. It continues to go higher. My only issue with this is I have no issue. It's getting a little far for me to buy. But now that I'm looking at its earnings per share growth, I'm interested. It's a stock that must have just had something get commercialized because how the dollars have taken off on revenue. So that's Arrowhead Pharma. That looks interesting. I did buy this one. This is Array. And I bought it because it's got a nice oncology play. And I bought it here because they had some super important data. And similarly, you had a Bible gap up, mobile breakup from a squeeze, my signal, and a kahuna occurring. And it's moved up a little bit since then. Clearly, I bought it because I saw some data. This is a stock that's sort of a bottom fishing play and one I'm not necessarily interested in. Regenix Bio. It did have a high closed doji. I'm referring to a bullish doji reversal on Friday. My indicator fired a pocket pivot and a kahuna. What do I not like about this stock? It's in a downtrend. It's got a lot of resistance to get up, so I probably would not be following that. It's not my kind of stock. Argenix, another stock with a sideways move and then a breakout. Maybe some news coming at ASCO, the big cancer convention this week. That looks interesting. Insight also looks interesting here, both daily and weekly buy. And this is what I look for. I look for this cross of the relative strength versus the spider to break above its moving average. And when that happens, typically I see the market turn around and start to go up. We broke out above the 50. We had a PSAR reversal. This made it to my watch list. I'd like to see something else happen, maybe a kahuna and a bit to move it, but I'm starting to get interested in Insight. BioMarin, too much of a downtrend for me to be chasing in. Just looking to see if there's anything else that looks good here. I don't know what Medicines has. I haven't looked at them forever. I guess if I owned it, which I don't, this big doji here might be concerning. Look at how high its relative strength is here, the red line versus the spider. And what a beautiful move since the beginning of January. That weekly bothers me, but this has been a winner, and as you can see, it's preclinical, no revenue. Iovance has a new drug that will have data come out at ASCO. It looks impressive. I might be looking to play a dip here. It's hard for me to chase something that's gone from 11 to 18. That's a pretty big move. On these preclinical biotechs, by the way, I often look here at the market cap, because if you get bought at this period of time, you probably get bought at 4 or 5 billion. The more closer the drug is to market, the more money you get paid, and a drug on the market, you actually get paid more. So this is probably ultimately at some point a buyout candidate. ArQule is another one that people like. I don't know what they sell. A nice stair step. I'd wait for it to go sideways before I got into it. So Blueprint is another oncology company that may have some interesting data. And if I look at Blueprint here, I see a stock that's been going sideways. It's in a squeeze. It did have a kahuna. My indicator fired on Tuesday, moved up pretty much the whole week after Monday. Doesn't make money. We'll have data at ASCO. I think that one looks interesting. So there's a number of things out here that you might want to be looking at in biotech. And don't forget, you can always do what I do, because a lot of these companies I have non-disclosures and I can't trade their stock, but I can buy LABU and look for a leg up. Right now, LABU doesn't look so great, but if biotech is strong, and you saw Celgene, Gilead, Biogen, IDEC coming to the top of the list, that's very bullish for biotech. Big pharma, or specialty pharma rather, also looks good. So does big pharma. One of these is very misclassified in HGSI. I'll mention it to George. Afria is a pot stock. I've liked it every weekend. It seems to on Friday move up and then nothing happens. I think this looks interesting. It had a new buy signal come in. A kahuna, mobile breakup from a squeeze and a Bible gap up. Keep in mind it's in a downtrend, and that mitigates my enthusiasm. It'll go up and down with the pots. I like this one a lot. This is Guardant Health. After its IPO, it had sort of an exuberant run up to above 100. It's come down based. I think it's ready to go again. There'll be some data to support that at ASCO. Guardant Health, a leader in liquid biopsy molecular technology. Amarin, kind of doing nothing right now. I need a catalyst before I'd be looking to jump into that. Earnings are out on GBT, a nice steady uptrend going sideways here. Mobile breakout from a squeeze. My indicator came in, looks good on the weekly. This is one that might be interested in watching and maybe making a move on as well. And so I typically will go down the top 10. Want to see a happy stock? Imagine if you own Total System Software on Thursday night, you had a nice move with a big Bible gap up on Friday. You know, there's rules about how to buy these and how to chase them. According to my stuff, you could have been long since the beginning of January. And, here was probably the time when it got interesting. And you've had multiple attempts. This is a beautiful time to have gone long the stock. Mobile breakout from a squeeze. My indicator is positive. Pocket pivot at kahuna with a pullback and a breakout from the 50. Could have bought it again back here when it came into the 50. That's when you buy this stock. This would be chasing it. I don't like to chase that. Global payments. A lot of these electronic payments and payroll companies have done extremely well. They're way extended and not for me. Look at the high jump being spiked there, but they continue to do well. Global payments. Don't know anything about Santander, but I really like this move it did on Friday. Not only was it a bullish engulfing pattern, how about a bullish engulfing pattern for the last month? A big breakout, a big move. It pays a 3.5% dividend. A U.S. bank, probably worth taking a look at. The index. Now, I'm not going to go through all 10. I'm going to go through the first 5 because I don't want you to think I'm so bullish that you go out and buy stocks, because I think this market is, it's not without risk. Sprint Corp, this is a arbitrage play now. Will their merger with T-Mobile happen or not? So news driven. CenturyLink used to be one of my favorite stocks, but I thought they canceled their dividend, but huge downtrend after they killed their dividend. T-Mobile, part of the play with Sprint. I've liked Verizon. I called it out multiple times over the last couple of weeks, especially when it was pulling down to the 200. It pays a 4% dividend. And Vodafone we looked at, and I wasn't concerned. I was concerned not with its dividend, but its chart pattern, that I wouldn't touch that chart pattern, although I was intrigued by the dividend. And then the one I've also called out, in addition to Verizon, again, I called it out back here when my indicator was firing, is AT&T, which still pays over a 6% dividend. And I don't think anybody for a minute thinks that AT&T is going away. So I usually go through the top 10 groups. We'll look at REITs, and then we'll stop. And then I'll look at some of my shorts, and then we'll look at the rest of my long picks. REITs benefit from low rates because it becomes lower to borrow to build their complexes, and also they pay a dividend. Public storage, places where people like me who accumulate stuff keep their storage that their wife will let them keep in the house. That's been a unit. This one and a number of others I've called out over the last year are ones I have long-term holdings. 3.4% dividend, continue to go higher. American Towers, they'll be involved with 5G. Went sideways to the 50 in a breakout. At some point, it's worth owning this. It'd be nice to buy it off of the 50. Pays a 1.6% dividend. Medical Property Trust, one of a number of medical device companies that I have that I like to follow. And you could see 5.3%, not medical device, but medical REITs, sorry. WP Carey, nice uptrend. There's a lot of REITs here. There's no surprise that one of the better performing indexes right now has been real estate. And here's XLRE at the top of its pattern. Look how strong it's been on the weekly. Pays a 3.2% dividend itself. Now, I did find some stocks that looked potentially good for shorting or potential shorts. Last week, my shorts, I took a couple of them and they actually did well. Here's a couple of the things that I looked at shorting or am short. Deere & Company, it's already fallen a lot, but here's a stock that's PE is greater than its growth rate and probably suffers if China increases tariffs. Zebra Technology, high performing. If it fails here at the 200, it might set up for a further drop. Perkin-Elmer, similar pattern, looks like it's failing at the 200. Plenty of room to drop. Zimmer, same story. The stocks that I like to short are when stocks are in uptrends, they break support, fail it on a retest, and go down further. There's a number of stocks here that have been in long-term uptrends that look like they're breaking down. So I put these together as a list. I made a lot of money on Align in December when it broke down. Whew. Just the fundamentals didn't seem to support the price. So I have a list of these, and what I do is I take my buy watch list and my weekly and my shorts. I put them into TradeStation, into my various scanners and radar screen, and I'm looking all day long for new signs of a breakdown. I'm scanning for a number of Q signals. This is an add-on to Metastock or to TradeStation. I'm looking at some of my favorite signals: green candle lows, red candle highs, obviously which one's more bearish than the other. Mobile breakdowns, mobile breakouts occurring during the day, pocket pivot up, pocket pivots down, and then my favorite, looking for viable gap ups that occur. So I monitor these real time using TradeStation, and on my bigger monitor you'd see that a lot of John Persons indicators, as PPSs, HCDs, and others are firing over here. The other thing that I find important is this free indicator from the guru on TradeStation forum telling me when earnings dates are out. So I try not to buy things right before or the day of earnings, not unless I have a seasonality play and I'm doing it intentionally. I'll finish here with a look at my buy watch list. I have plenty of buys because I want to follow them. I don't know whether, I'm not sure I would say I'm super bullish in this market. A lot of REITs, no surprise. I told you I like REITs. I like managed care here. Anthem and Humana, I think, have a ways to go, but more fundamentally because of the Medicare for All talk. If I had to pick my favorite stock on this list, let me just call this one out as a potential dark horse breakout candidate. It's Macrogenics. The market, I think, missed this, but earlier this week, Macrogenics came out with some data on this date that showed that they beat head-to-head Herceptin in a clinical trial, Herceptin being a biological therapy for breast cancer for women that has been extremely effective, has a big market. Their data will be fully released in a couple of weeks at ASCO, or in a week at ASCO. So this is one that I may buy some stock in before then. Make sure I'm on a daily. No rush, it's just going sideways right here. But this was the list that I put together of stocks that I liked. And let me look at my folder here and tell you the one I starred is the one that I'd be most likely taking a trade on. Okay, there's two that I'll call out. And one of them, I don't even see here. Oh, that's because I got a filter on. Hello. All right. Still don't see it. All right. Let me put it back in. All right, so the first one I want to look at is Smart S. All right, I know what happened. Let me fix this real quick. I have a feeling that I didn't take these. Copy. Put them in here. No, never mind. I'm using the wrong. Forget what I said about those shorts because I showed you the shorts I picked a week ago, and that's why they're all down. So let me fix that. I apologize for that. That was last week's shorts that I picked. So let me go and show you this week's shorts and longs. Oh, they all still look pretty weak, don't they? Spent I was pretty good on my picks last week for shorts. All right, done. So let me go back here, go back to my short list. So let's look at these. These will be more shortable where they are. We have Autodesk, bad earnings, broke down. So again, the list I showed you of my shorts turned out to be last week, but you could see all of them maintain weak throughout the week. You've got Autodesk breaking down here. I'd rather see it come up here, retest the 50, and then fall down to the 200-day moving average. I'll be watching Autodesk. Ansys is a software company, is broken below the 50. Again, I'd love to see a retest before it breaks down. Chipotle Mexican Grill had earnings come out. I didn't even follow it, but it broke down. I guess earnings are not to next. Yeah, earnings must. I'm going to hold my breath on that. I thought earnings came out. Broke down above the 50. You can see the industry group is very weak. Everything's turning red here. The weekly looks bad. I'm going to be looking for this to potentially retest the 50 and come down to its 200. Edwards Life Sciences, despite the fact that there's a lot to like in medical devices, this is on a strong downtrend. Probably would want to see it retraced before I would short it. Goldman Sachs, Here's a retracement up to the 50 and a failure, retracement, to the 200, retraced here to the 50 and broke down. I think Goldman Sachs looks interesting on the short side. Kilroy Realty just broke down below the 50. Lam Research, technology play, broke down through the 50. Low close doji here, looks like it wants to come down to the 200. Universal Display, another one breaking down below the 50. Philip Morris, probably wouldn't short it here, it's sideways, but if it broke down below the 200, which is right here, I'd take this as a short. And Constellation Brands pull down below the 50, below the 17. I'd probably wait for it to break down below this area here before I would get aggressive on the short side. And then Tiffany, especially with the Chinese raised tariffs, this is one that'll probably get hit, and it's falling as well. And those look more actionable from a short perspective. Here's my buy watch for this week. I apologize for showing you last week's again, although there's a lot of overlap. Once again, I have a lot of REITs that I'm interested in. This week, Arrowhead Blueprint, Exelixis, another biotech. This one is sitting right on its 50-day moving average. Here, our 200-day moving average here had a kahuna in my buy signal mobile breakout from a squeeze. That was one I might be considering, and we looked at Insight. The two that I liked that I thought were setting up already, Smart Street right here. Basing here on in a squeeze, had a mobile breakout from that squeeze on Friday. It had a pocket pivot and a kahuna sideways on the weekly as well. And when I looked at this thing in a couple of my different trade station screens, let's look at Smart here. Had a high close doji and a PPS buy signal on the weekly coming out of a squeeze. I think that looks very bullish. And then over here on the Q charts, a go with flow on the weekly and the daily. It's got to get above 43.33 before I'd be interested in chasing it, but I think you can get a 5 to 10% run up to the target here would be somewhere between 46, say maybe about $48. So I like Smart Screen. The other one on this list that I thought might be actionable sooner than later was Boston Scientific. And you can see Boston Scientific has moved up from the squeeze, couple of pocket pivots. My signal fired back a week ago on both the daily and the weekly. That one looks interesting. And then, I can't help but keep going back to this guy. And this is the stock I gave in April last year at $6 or something like $6, Tandem Diabetes. And the reason why I'm going to show it to you here is it's setting up in a squeeze. And every time it's done that, it's popped, it's gone up. So earnings aren't out for a while, but I also like Tandem. So I'll let you take a look at this. Centene I like in the payers. I still like Managed Care. Humana is still there, as well as Centene. A couple of life insurer. And then even home builders. Look at DR Horton, sideways move to the 50, mobile breakout from a squeeze, my indicator firing, a kahuna, and weekly firing. So there are some things to like to the long side. They're listed here. The REITs are probably somewhat defensive with their dividend pay. Life insurance is probably defensive. Medical devices and biotech probably are defensive as well. Probably not a lot of risk from China. And I'll leave it at that. So, hope you all have a great week. I'm not sure I'll do a video next week because I'll be at ASCO. Watch for biotech. Not all will go up like rockets. Some are going to fall like rocks. Talk to you next week or a couple weeks. Bye, everybody. Happy Memorial Day, and to those that serve, thank you for your service.